Welcome, viewers. Today we'll be diving into an in-depth analysis of the third quarter earnings season for 2024. As the Q3 earnings season draws to a close, companies in the S&P 500 index have reported mixed results. A total of 91% of the companies have already released their earnings, and 75% of them have exceeded the average EPS forecast. Although this number matches the 10-year average, it slightly falls short of the 5-year average of 77%. Overall, earnings came in 4.3% above expectations on average, which is below the 5-year average of 8.5% and the 10-year average of 6.8%. So, while we've seen positive earnings surprises, both the number and size of these surprises are lower than in historically stronger seasons. On a sector-by-sector basis, communication services and healthcare were the main drivers of growth. Communication services had a year-over-year EPS growth of 23%, with Alphabet and Meta Platforms being the largest contributors. Healthcare was the second largest growth sector at 13.9% year-over-year, with Pfizer as the biggest single contributor to growth, particularly within pharmaceuticals and biotechnology. On the other hand, energy and materials were the sectors facing the most difficulties, with energy especially impacted by lower oil prices. Revenue for the S&P 500 grew by 5.5% year-over-year in Q3, marking the 16th consecutive growth period. This growth rate exceeds the 10-year average of 5.1%, though it falls short of the 5-year average of 6.8%. The largest contributors to revenue growth were the healthcare, information technology, and communication services sectors, while the energy sector saw a significant decline due to lower oil prices. The blended EPS growth rate for Q3 2024 was 5.3%, marking the fifth consecutive quarter of year-over-year EPS growth for S&P 500 companies. Looking ahead, analysts expect the index's EPS rate to increase by 12.2% in the fourth quarter of 2024, with forecasts for the first and second quarters of 2025 at 12.7% and 11.9%, respectively. For full year 2024, analysts forecast 9.4% EPS growth, with an estimated growth rate of 14.8% in 2025. For the upcoming fourth quarter, 77 S&P 500 companies have provided guidance, with 53 of them issuing negative EPS guidance and 24 issuing positive guidance. The share of negative guidance, 69%, is above both the 5-year average of 58% and the 10-year average of 62%, reflecting some caution and challenges in the market environment as we move into the winter season. For the full year 2024, analysts project 9.4% earnings growth and 5.1% revenue growth for the S&P 500. The forecast for 2025 is 14.8% earnings growth and 5.7% revenue growth, indicating expectations of stronger growth ahead. Earnings growth is expected to remain positive in the first half of 2025, with projected growth rates of 12.7% for Q1 and 11.9% for Q2. In terms of valuation, the forward 12-month PE ratio for the S&P 500 was 22.2, which is higher than the 5-year average, 19.6, and the 10-year average, 18.1. This PE ratio has also increased from 21.6 at the end of September. The technology sector had the highest forward PE ratio at 30.3, while the energy sector had the lowest, at 14.4. The rise in the total average EPS estimates for the index helps explain this elevated PE ratio. The market has also reacted unusually strongly to both positive and negative earnings surprises this quarter. Companies that exceeded EPS forecasts saw an average stock price increase of 1.3% in the 2 days before and after the earnings release, which is higher than the 5-year average of 1.0%. On the other hand, companies that fell short of EPS forecasts experienced an average stock price decline of 2.9%, which is greater than the 5-year average of 2.3%. For example, Tesla's positive EPS surprise led to a 23% increase in stock price within 2 days of the earnings announcement, while FedEx's negative EPS surprise led to a 13% decline. Looking ahead by sector, analysts expect strong growth in healthcare, utilities, and technology next year, while consumer services and energy may face challenges. The healthcare and utilities sectors are expected to see the largest stock price increases over the next 12 months, while consumer staples is expected to grow more modestly, at around 3.9%. Thank you for watching, and I hope this analysis provided you with valuable insights into the current market trends and earnings expectations.